Hello, everyone. Stocks closed out the week in pretty poor fashion. Thursday's bounce attempt looked like it maybe could have been the start of something for the market to build upon, but I think that the gap higher, immediately having that as the high of the day, and the way that we sold off intraday, whenever we started to sell off, volume picked up greatly across the board. I think it's just a overall poor sign and indication that there is no way on the short term we should just expect stocks to just, okay, we've seen the lows, 824, we're going higher now. We just don't have that kind of clear-cut evidence. The NASDAQ, the reversal today, the distribution day, volume was heavier and above average than the session before. Not good. And the Russell 2000 leading the way down as it comes close to testing its 824 levels. Once again, can't stress this enough, not good. So the Russell 2000 is the weakest of the indexes. And once again, this is the index that you don't want to be the weakest. And the strongest index of the day, thanks to one stock, Nike, was actually up 0.70% today, but you can see its reversal off the intraday highs. Once again, some ugly overall technical developments. And the problem is that whenever you start looking at big cap stocks, look at Facebook. Now, I don't know about you, but I've seen a lot of charts in my life, and I know that like every chart, even this chart pattern, looks better overall than the way this one's looking right now. But still, this one didn't look good either, and it didn't. I don't know. The stock patterns haven't really looked good since 2008, but they really haven't looked good this year, especially after the most recent pullback in Facebook is just an example. This is a pretty ugly, volatile-looking consolidation pattern. Looking at an arithmetic chart, I know that the 10 and 20 and 5-day moving average mucks it up a bit, but you can see it's just not the same kind of pattern. Look at Google. Look at how wide and volatile that's become. Amazon trying to reverse those recent short gains that it had. Netflix still looks like it could be trying to build out something, but look at its reversal today. Priceline not looking good. Apple, that's not a healthy looking base. Look at the banks. Goldman Sachs, Morgan Stanley, JP Morgan. So overall, we just don't have a market that looks like it's very healthy and like we really want to rally. And when we look at our current positions, our longs continue to spin our wheels. Like I said, if you have a very limited account capital, you pay high commissions, and or you are not systematic, trading right now is just pointless. It's not worth it. Stay in cash. We're about 70. We fluctuate from 65 to 75% cash with all this posturing that we're doing with these long signals, but things just continue to fail. PayC is given another 50% sell signal, not 100%, because we're still from that original entry. The 200-day moving average is much higher, still above 50%, so you don't fully sell until it closes below the 200-day moving average. But once again, another 50% sell signal. ADPT, look at that violation of the 50-day moving average. To me, looks like this stock is probably done, especially with the way biotechs look. I mean, look at what happened to biotechs today. I forgot to show that, which is why the Russell 2000 was so ugly. But not healthy looking technical patterns at all. Look at the big boys. This is the biggest problem. Remember, this was the leading index during the uptrend, so during a market pullback. I mean, look at a 9-day chart of Biogen and Celgene from the 2009 lows. So we're starting to see some movements that we haven't seen in this outside of 2011 and Illumina. But just look at the patterns. This is pretty ugly. These are not patterns to even be symmetrical, are not going to fix anytime soon. Just think. So that means that we need to have a right side as long as this left side, which is now going on 3 months before we start to look good. Goldman Sachs, now we're talking about 4 to 5 months. So once again, we're not in a healthy situation. Now that being said, let me go ahead and go through the rest of those cells really quick. MOH, that one is a 100% sell signal. So once again, another new long signal failing. DXCM is closing below its 20-day moving average on above average volume, 50% sell signal. THIL, that looks like it's about to fail, so it's a 50% sell signal, but what I'm going to do is I'm now moving up my final sell stop to 86.01 because like I said, I don't want to see these really any kind of small gain turn into a loss, or really kind of any loss get bigger than what I really think it needs to. And like THIL is done, just like SCAI, I've already been knocked out of 50% of the position on 924. But once again, what I have left, I'm splitting up between today's low a day and the signal date's low a day, just to basically allow me to leave basically flat on the position because things just aren't working, so there's no use fighting it. Now, like I was going to say earlier, like there are still some technical patterns that look good out there. HiHo is a manufacturing stock, low price. Remember, these are where the new leaders are going to come from. They're going to come from the low price stocks. They're going to be low price here. They're going to show relative strength during a bad market. During a bull market, they normally look better. But HiHo is one that you can see that's looking pretty good here. But outside of that, there really isn't a whole lot. But I do have two new long signals today in speculative stocks. TRCH was only triggered in my price volume BOP scan, not in any other scan. Very speculative. 0.5% of account capital is going into this position. Once again, 0.5% of account capital for me is over $1,000. So it's not like my commission cost on this position. It's going to probably reach up to about the $5 level, depending on how many shares, even to get a few $1,000s worth of TRCH is. But once again, if 0.5% of your account capital is like $100 and your commission's $10, you might not want to go long TRCH. But if you do go long, like I'm going long, the small amount, first sell stop levels below 196, final sell stop levels below 185, and or you can have one final sell stop level at 185, because really we don't risk a whole lot to know that we're wrong on only 0.5% of a total account capital. Now, the other long signal is in a stock that gave us a original long signal here. Beautiful technical pattern, by the way. This is what you want to see before maybe a market uptrend, and then maybe you see a follow through. So let's say that you get this chart pattern before a fall through day. Okay, so you buy some here. Now you get this pattern on a fall through day, you buy more. And then normally what would happen is that you would then get, this signal right here. Now maybe you put a buy stop above 1330, which is where I put, because I got shaken out on this day right here. Got shaken out of, that day right there. Got shaken out 50% of my position. So now I'm using 1330 to get me back in the position. But today, a strong pocket pivot point signal with a BOP exploding back to max green BOP and a big volume surge. So now let's say once again that you got this signal, get a follow through day, get this signal, then you get another signal and the follow through day is working. This is how you end up loading up on a stock, because it would be something like things would already be working. Get a good stock, remember, 2.5%, 5% signal. 10% signal, and then maybe another 5% signal here, because now you're starting to get a very large position. But that's how we would get heavily long, is with a pattern that looks like this, giving us signals during a follow through day session. Now obviously big cap stocks are going to look like this, but a lot of mid caps and small caps used to look like this. So in case you do see this pattern showing up before a bull market or a fall through day, pay attention. But MMAC, technically it's a buy signal today, but the problem is it's closing pretty decently off the high of the day. So this is not a buyable signal. Once again, 0.5% of the account capital, but it's not a buyable signal until it trades above 1330. So remember, shaking out half here. So I was going to add half back here. And with the 0.5% signal, basically I'll be getting long 1% of my account capital with a move above 1330. So it hits 1331, it gets triggered, and I am going to use buy stop limits, but they'll be far enough away that nothing crazy should happen to where it can't just explode to 1331 to 1350 and I don't get any fill. So we'll see how it goes. But overall, the market is in a precarious position. I don't recommend being a hero here. Remember, you're undercapitalized, you pay high commissions, you're not systematic, or worse, you're all three. Cash is king here. This market, it might be longer than late October, even November, before it can really get anything going.